Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, let's get right to it because we do have U.S. ADP employment change about 15 minutes ago. That's like the one news release. Yeah, that's the one news release that happens before I ever start trading. And it was 77K versus an expected 140K. So the ADP was pretty bad.
0.6%.
Coming over here. Oh, we turned that off. Sorry. Coming over here to the charts, you can see the treasuries
Block
shooting
sell.
up pretty quick. Block sell. That's interesting. We'll come to that in a moment. Okay, so here's the treasuries. And you know, yesterday things like really collapsed going into the later part of the day. And I'm really not entirely sure. I think that there was some stuff like that the Treasury Secretary suggested, or not, the Commerce Secretary suggested that they could split the difference and make a deal on tariffs. But then other people have been saying that Trump privately is thinking that he's going to stick with tariffs. So I'm not entirely sure what the deal is there, but we saw a pretty good drop in the treasuries yesterday, and the S&P 500, a pretty decent rally that then like collapsed going into the close, and we're kind of flat. Maybe turning down here this morning. So I think that we have a particularly interesting setup for things today. Oil has pushed below that recent support into the 6700 area, sorry, $67 area. Gold and silver are still looking okay. Copper really jumping this morning. That's a crazy jump in copper. Japanese yen, a little bit more volatile, but the dollar, the dollar is just getting killed the past 2 days. And then Bitcoin, they came back. They're struggling. We'll see what happens there. Difficult for me to say what's going to happen in that, where we're really at. It looks like Bitcoin is kind of in a volatile decision point area. Okay, so it looks like our data is loading up there correctly, and I did remember to turn our algorithm on first thing here, although it does not look like we would have gotten a signal yet, so we shall see. Might just have, you know, how do I say, a threshold that's just a little bit too uncommon. But we'll see. Morning, Uzi. Brad, we have just got started. No. You know, the dollar coming down would probably be a good thing overall for the markets, but it might not necessarily be a good thing depending on why, right? To be honest, I'm just looking at this thing and like 2 weeks ago, I saw a shift in the labor market. Like a bunch of companies just all of a sudden came out of the woodwork. They're hiring. One company that was I was kind of dreading, to be honest. Dude, when these companies do this thing that's like, oh yeah, we're going to put you through everything. Like I was talking to these guys yesterday. I don't think I'm even going to get through to the next round, but their interview process was like, okay, yeah, first we're going to do the HR screener. Then we're going to make you do an online thing where you have to record some videos and stuff like that. And then we're going to have a 90-minute technical interview. And then we're going to have a 90-minute design interview. And then there was like 2 more interviews after that. I'm like, who has time for all of this? Who in the company has time for all of this? Anyways, I had one company that was kind of like that. Not as bad as this one that I was talking to yesterday. But there was this other company that I was talking to that they were kind of thumping their chest about how difficult their technical interview was, right? And I'm just kind of like, look, guys, I got hired at Goldman Sachs. I don't care how tough you think your interview process is. It's not as tough as Goldman's. So, but they canceled the role. Like they did all this stuff. Oh, we're hiring. They talked to all these people, and then a week later, they canceled the role. So did the business leaders decide that they didn't like what they were seeing in the economy and they decided to, like, what's going on? And then this week, hardly any jobs to apply to again. So it seems to me that there are businesses holding back because of economic uncertainty. But then I don't think anybody has money. I think that the tight financial conditions, the high interest rates are just squeezing the bejesus out of companies. And none of them know how to deal with it. Because all of the companies that are here are companies that in the economy today are because they are companies that excelled when interest rates were low. So there really aren't any companies out there that really understand how to do things when interest rates are high. And there aren't really very many companies out there that excel when interest rates are high. And I got 2 weeks. What is it? I guess I got 4 weeks. Counting this one. I have 2 outstanding. One, they asked me for availability on Monday and I sent it to them and then I haven't heard back from them, so I don't know what's with that. Maybe I should check that one. We should double check that one. Huh? I think I already did it. Yep, I definitely did it. I submitted it. They just haven't responded back yet. And then there's another one. There's another one that was like, I went through all the interviews. Everything seemed good. They all sound really happy and positive and really grateful that I came down and everything, almost as though I was like the only person interviewing or something. And then, and they even had me come down on site. And then like they relisted the role on Monday. And I haven't heard anything from them in a week. So what the F? You're just ghosting me now? Is that what's going on? Probably shouldn't start out by talking about this stuff because it's going to get me all anxious. But anyways, I'm just watching all of this craziness that's happening in the market. And I'm like, this is not helping. This is not helping. Nobody's coming. I don't think that a job is in the works for March. And then the window might be closed and there might not be another window for a year or a year and a half. Like if interest rates stay where they are. Meanwhile, I've been doing everything that I can to try and like boost the YouTube channel and stuff like that. And it's just not going. Financing payrolls sucks. Every company. Yeah. Like, so like, if nobody's hiring, only choice is start your own business, right? But then you run into, you have to borrow money. And how are you going to borrow money when interest rates so high? Ratcliffe says that they cut off intelligence to Ukraine. The best days were in the last recession, and actually kind of weird. We rode 1.1 million in a year in revenue on the recession. COVID. The other issue is that the kind of business that I would start would be a software development business. And apparently you can't write off all of the costs of your development anymore. So it used to be that you could say, okay, like I spent, 5 million in development costs, whatever, right, this year. And then write them off over the next years, so that when you do make money, it's on the taxes for the company, at least it says, no, actually you didn't make money because that was all money that was spent on development. You're just making up the money that you had spent earlier on the development. But now you're not allowed to do that for development expenses anymore. So as soon as you start making money, you have to start paying taxes on it. So like that kind of makes starting a new business and that has like high development costs pretty much dead, doesn't it? Like you have to start getting like a return on your money like right away. And when I say return on your money, like it can't be like, okay, I spent 5 million in development costs, and then year 1 I make $1 million, and then year 2 I make 2 million, and then by year 3 to 5, maybe I've paid it all back and then I'm in the black or whatever. Like you can't do that, because as soon as you start pulling in 1 million, then you're going to start taking whatever percent of it. Well, the treasuries are kind of just hanging out here. Kind of seems to me that despite the very strong impulse that we got from the ADP, that the market is kind of COVID made people stupid, so it's been tough to recover. I wonder how much of what we're seeing is the result of people being so isolated, right? Like people aren't going into the office, people aren't doing these things. So I just don't feel like that anybody really has a clear view of what's actually going on, Dude, I was talking to my neighbor the other day, and he's been out of work now for 2 years. Who is doing sales? 2 years. He said that he's had multiple times where they asked him to like give a presentation and everything. They probably used the presentation. He didn't get hired. Like, what? society isn't really going to grasp or concede the damage we did for a generation. Well, yeah, because they all just want to stay home. I mean, I would rather work at home. It's a hell of a lot more convenient for me with an autistic child and everything. Right, turns out if you give people free things and tell them they don't really... Well, I don't know if we told people that they don't really have to do anything. I mean, like, I think that a lot of the remote workers are working a lot harder at home than they did before. I know that I certainly ended up doing a lot more work at home than I ever did when I was in the office. But that kind of had more to do with just me getting really good at being productive, I guess. I'm actually kind of amazed at myself. Like, so this next video that we're putting up about assets, to be honest with you, I'm not really into it. It was just kind of like, this is some information that needs to be there that we don't really have a video about per se, and as a companion video to the one about how much money do you actually need to start trading. Well, you also kind of have to think about what assets you're going to trade and like the startup and monthly costs for, you know, if you're going to do futures. Because futures has a lot of monthly costs. And it was hard to write it. But I did it on Saturday. And then it was hard to record it. I was not feeling super positive yesterday. It was I was getting to the point where it was hard for me to even talk. But I recorded it. I got over it. I recorded it. I edited it. Like, just the whole thing. So like even when I think that I'm fighting, like I think though those are all symptoms of depression. I go to sleep and I wake up and I'm fine. When I'm doing the stream, I'm fine, you know, probably because I'm on the Adderall. So like I think that the medications kind of prevent me from going into like, if I wasn't on medications, I think I would probably be just straight up depressed all the time. But I'm going through periods where I go through depression. And I was still getting shit done. So for that, we should have posted the video on Monday. But the next video will be about cumulative delta. I think that one should be a pretty easy video to make. But then after that, I really want to make a video more about the economics. I'm not entirely sure how to approach that one. So much work done at home that it's taking multiple months to find new jobs because all that productivity was totally worth it. Well, I think that to some extent companies have become more productive and therefore do not have as much of a need to hire new people. I've been in a deep hole since dog diabetes. Wow. Oh, I'm sorry, dude. The problem here is like staring down, not being able to pay for anything, and not being a single thing that you can do about it. You're completely at the mercy of the markets. It's like, man, it feels like you're in the Squid Games, except for that you're like going through the Squid Games multiple times every time you're doing a job interview. It's crazy. I'm not the only and you know, everybody's going to ignore it because there's a very, very small percentage of the population that's going through this right now. You're not entirely without options. Well, so I have savings, I have my parents, I have church. So I don't think that we're going to lose the house or I'm going to be homeless or anything like that. I'll probably still be able to be here. So far, oh, that was a good move up there. But they're coming into the inventory cost basis now, so I don't hear anything on my news squawk. Anyways, the YouTube business, is, if we call it that. Ah. So I'm hearing a headline about tariffs, but it's unclear where this is coming from. So I don't, maybe that's what the market's reacting to. Okay, so if I work, yeah. So before it was, if I go and I get a retail job or something like that, it's less than unemployment. But unemployment ends, that changes things. Then the issue is kids, right? Well, I think there's two issues there. Issue one is somebody has to watch the kids. I guess my parents can watch the kids. Yeah. Issue number two is if I'm picking up 40 hours at a menial job, does that take away or prevent me from doing other things that would be more productive? You know? But I really don't think I can even get a retail job right now. I don't know. So for instance, well, I already talked about want to start own business, don't feel like we have the funding for it. I suppose that I could tell my parents, you just got to come over and watch the kids every day and I've got to develop, and I'm not making any money from it, but that's just like our only choice. Or like I could try harder on doing freelance projects, you know, and I think that spending time doing those things would probably generate more money than like working at Walmart or something like that, you know? And then on top of that, I mean, I think I'll still be interviewing. Like that's the really, I think that's the thing that really like the thing that seems to trigger me. The thing that seems to trigger me that really gets me upset and feel down is the idea of going through more and more gauntlets of job interviews and not getting the job. Like, especially when I hear companies talking about, oh, we're going to do this and that and the other thing. And it's like, the fuck, dude, I've been doing this for 15 years. You know what really pisses me off is when I get on TikTok and somebody's like, well, I've been doing software development for 5 years and I really know the industry. And I was like, what the fuck, dude? I've been doing this for 15 years. You don't know shit. I don't know shit. And you're all of a sudden you're an influencer? Okay. Or here in the day trading space. So because I interacted with what is his name? Delta Trend. Anyways, he actually, I got him to watch our video on the ICT performance, by the way. He really liked it. So that's cool. Now I guess I got to get him into econophysics. But anyways, I think because I watched him, TikTok has decided to start trying to show me day trading influencer content again. And it keeps sending me these 19-year-old dipshits that don't know jack squat. I did have a TikTok video that went okay, right? Because I said, oh yeah, the market is down today on tariffs that we've known about for a month. That sounds like an efficient market to me. That video did pretty good. Strangely enough. Maybe because it was so short. I guess that's the thing with TikTok is that I can't... it seems like there was a time when making informational content on TikTok did pretty well, but that like people have moved past that and that they just don't really want to know anything on TikTok. Broccoli top kids. Yeah. Well, the Delta Turn guy, he's a broccoli top. Sorry, what was this? What was his full name? Thomas is his name. Yeah, Delta Trend Trading. Oh, this one that followed me is a fake account. Oh. You know what? I don't think that I've gotten very many day trading influencers that are like foreigners. Grab out low rate indicators and sell them to people on Forex Factory. Well, okay, so should I be making individual like indicators and selling the individual ones? Like we made a fair value gap indicator that I think is actually pretty cool and is better than pretty much any other fair value gap indicator I've seen. It's certainly better than the ones everybody's using on TradingView. Should I just sell that on its own? What should I sell it for? $30? How many people do you think I could get to buy just a fair value gap for $30? You have to face reality. You're not enough of a scumbag to be an influencer. It's not your fault. The audiences don't understand. You know what, Izzy? That's freaking hilarious, but it also kind of hits a little too close to home. Because it really fucking is the truth. Like, I think there's a lot of things working against me becoming a successful influencer. Like, I didn't set out to be an influencer per se, but that is kind of like if you're gonna make money from this, that's basically the way you do it. And what is the Lux Algo strategy? I'm not familiar with. Lux Algo is something I've heard I think on Reddit though. Oh, the world's largest provider of trading indicators. Oh, okay. She coded the indicators for Sierra. Other coders have been selling the same ones for years. But you know what though? Like, I don't think that there's that much of an audience on Sierra charts. Like, I don't really have good metrics, but my running theory is that the Sierra Charts audience is roughly equal to the size of the NinjaTrader audience. MetaTrader. TradingView is more serious, yes. You know what? If I think the issue in TradingView is, well, like for the fair value gap, for instance, right? If I made that in TradingView, it would like so screw up your chart. Like the reason that I can get away with it in NinjaTrader is because I can get into like the raw drawing code. I don't think that you can do that in TradingView. MetaTrader's another one. I don't know how big MetaTrader actually is. Yeah, TradingView is really good. Well, you know what I think that is kind of like the golden thing on TradingView is that just the way that the chart interface works seems to work really, really well. In fact, I saw these one guys, they had done an impressive amount of work. I was kind of like, I don't know why anybody would buy this, but they had done an impressive amount of work. They basically make NinjaTrader work like TradingView, right? And I think that if I were to make my own platform, which is I guess the thing that I really want to do, that I would probably make it more like TradingView than NinjaTrader in terms of the charts. But there's this other problem. I don't know, man. It seems to me that the largest bulk of the trading community out there, that the reason that they fall down where they do is because they barely have enough money to even fund their account, let alone spend extra money on monthly costs or buying software or things like that. So I kind of suspect that for any indicators that you make, that there's still a somewhat limited audience for it. That's why I'm kind of always looking at these things where it's like, it seems to me like these guys, they have like big websites and multiple people involved in them. So like there are businesses out there just selling trading indicators, and I'm kind of sitting here going like, do these guys actually make money though? Do they actually make enough money to have like a whole company? But that is why so many people come down into the price action way of doing things. So let me show you an example. This one was kind of funny, actually. I thought it was kind of funny. Okay, so there's this post on Reddit. It really is this simple. 4-hour PO3 model, been trading this for a few weeks, extremely useful. Okay, they're using TradingView. I can see that there's a fair value gap listed on here. Okay. I don't know, whatever. This is exactly the kind of content that I absolutely despise. Oh, you had one trade that made money, and now you're going to go and crow about it. And basically all you're doing is you're promoting random. You're promoting randomness, really. So I comment. Oh, wow. It's actually, let's see the full discussion. How high did that rank in the other comments? It It's not the top one. This actually got a lot more views than I would have thought. Am I missing something? Where is the link to a course? Oh my gosh. Okay, but anyways, I went simple and insulting and just said, that's cute. But even a blind mouse finds a cookie every once in a while. That's kind of been my, like, go-to. And I'm kind of bit worried that, like, in a lot of cases that you'll just get downvotes from that because you're being mean and everything. Here, this guy, he actually has the good comment. Yes, because mice can smell. Yes, it's actually true. So it's a bad analogy or whatever you want to call it. But I digress. So the guy that posted it, that triggered him enough to respond to me. He says, not to be extra, but is someone instantly a loser if they don't use 5 trend lines and or a bunch of indicators? Thank you for your comment, and I'll post more pictures of successful trades. Just wait. Why would he say that? I didn't say anything about that. If he knew anything about me, he would know that I say that there's very limited edge that you can build just from technicals on an intraday basis. Like the technicals can basically only get you to break even, as far as I can tell. I mean, you might discover something super crazy, but especially if it's like a strategy that's like well known and everything else, like that's just gonna get you to break even. And it's really the informational inefficiencies that are probably going to bring you profits as a day trader. So if he knew anything about me, he wouldn't say that. But of course, he doesn't know anything about me. I'm just a random person. He doesn't know that I have a YouTube channel and all this, which is one of the things I find so fun about Reddit. Interacting with these people, and they don't know anything about me. That's great. Because, it's different when I'm arguing with people on the stream. Okay, but so he's projecting here, though, isn't he? He's projecting, that he must think I'm a loser because I don't have a bunch of trend lines and a bunch of indicators and stuff, right? They pride themselves on not using a lot of indicators, not having to pay for software or anything like that because they can't afford them. And they have a strategy that's basically all about using the stuff that's available for them for free. Just using the chart. And I guess he has indicators on there, but they're like free indicators from TradingView. Right? So that's what I was getting at. So like, if you go and you look at it and it's like, well, the day trading community has expanded like huge. And can you make money just from providing products to that community? And the answer is that you can't really reach a very large swath of them because by and large, they do not want to spend any money on anything. And that's why the people that are really making money from it are the people that are trash influencers that just feed them these strategies that are based purely on the chart. Do you have a view on the dollar? I don't think that I have a larger term view on the dollar, but I will note that the dollar has been falling, and it's a huge deal. It's been falling pretty hard the past 2 days, and I think it's a huge deal. So I guess after all of that, what I'm saying is that I could spend some time making an indicator that's like, I think that's popular among retail traders or things like that. I made the fair value gap thing. That was interesting because I was able to do some programming that was interesting about it. But I don't think that that would make more money than if I invested that time into making our indicators better and promoting our indicators more. So going back, bro, audiences look up to YouTubers and streamers the way boomers do with celebrities and freak out when it turns out that they're sex offenders. The thing that I think is so wild is that it keeps ending up being like some of the dumbest people that end up getting the famousness, right? Like, it kind of seems to me that there's a certain level at which, like, how do I put this? I'm not trying to say that like it's all manufactured, but I do think that a lot of people that blow up, that it's not a coincidence and that it's not because of their content. Because I've seen too many people now blow up that just make absolutely terrible content. Like the whole ICT thing. How did he become so freaking famous on YouTube? It makes zero sense. I think that it's manufactured. I think that he got his little cult to, you know, boost him. They might have even used like algorithms and stuff to do it. And YouTube is just kind of like, well, as long as we're making money, we don't care, right? And it kind of seems to me that if you're like trying to be genuine, like you're trying to play by the rules and, you know, be smart and be responsible about what you say and do with your audience and everything, that you are less likely to blow up. That they don't want to blow up somebody that's smart. They want to blow up stupid people that they can control. You know? What tools do you use to make your indicator? Just the text editor. And the platform. It's like paying taxes as a service-based business owner. You feel good about it, but you're poor because of it. Yeah. That was the other thing I was thinking about when I was making this next video. Is like everything that I have to go through to make a video, and now all of the willpower and emotional control that I have to exert to push myself through here when I don't really want to do it, and not really rewarding me for it adequately. Kind of interesting here. We did push up a little bit further, but not really on solid increases in delta. The order imbalance has kind of been coming back, in fact. So let's see here. I have LuxAlgo open here. Just make indicators to highlight in short videos over AI narrated explanations. Okay, so this was something that I saw yesterday that really made me think. Because this guy, he was saying, like marketing is why McDonald's makes more money than Five Guys burgers and fries. Because Five Guys spends zero on advertising. And McDonald's, all they do is they just plaster the world with advertising. And it's just, you have like one very consistent message, right? I'm loving it, and you just put it everywhere. And he said, people do not buy the product that is the best product. They buy the product that they like and are familiar with. And that's why people go to McDonald's more often, even though it's objectively a worse burger. And so I was kind of thinking about that, and I was like, well, so number one, I don't think that I have like a consistent enough message like that. There's certainly themes in my content and branding and everything to it, but there's not like one phrase that's like, this is every video, right? And then plaster the world with it. You know, like I think that when I was really pushing content hard, I was making 1 or 2 TikToks a day, and I was kind of didn't make more than that because I was kind of concerned that, well, I don't know. Maybe because I didn't think that I had good content to make, and 1 and 2 because I thought that it would like cannibalize each other, you know? But now I'm going back and I'm like, okay, but what if I made like 10 videos a day and made a comment about everything that's happening in finance, you know? When you're looking for a way to make it on YouTube and the audience is explaining the kind of content they see on every inch of YouTube. Every Lux Algo short was like, I found this indicator that makes money X% of the time. Really? I think one thing is holding me back, it really is I'm spending a lot of time with kids. But, man, this is... I think that because my child is autistic, and I'm sure that as he gets older, it will get a little bit better. But I think that my life is never going to go back to being the same that it was. I kind of thought, okay, we're going to have a period of 5 to 8 years where I'm going to have to really pay attention to the kids, and then I should be able to switch back to focusing on my things again. And now I'm realizing that like that's gone, like it's never coming back, and I never grieved that or something like that, you know. I was just like, because if I want to go and make a TikTok, like I can't come into my office and just let them be in the other room. They won't let me do that. They will come in and they will start tearing apart the room. And I can't just let them, you can't just leave them in the office. Like if I left them in the office, this room would be completely dismantled. You know? So if I were to be like, okay, let's make 5 TikToks a day or whatever, it would be hard for me to do. You can make these videos without ever showing yourself on camera. Well, yes. Yes to that. Well, I mean, I think I would still need to be at a computer to do it, though. I don't know. I don't think I can make that stuff with my phone. I don't know if I can make that stuff with my phone. And like the thing is, it's easier for me to make content by pulling up a phone, press record for a minute, you know? It's easier for me to do it with my face than it is to make the videos without my face. Like, I think it would make more sense, yeah, instead of making videos about indicators. I don't know. Geez. I think it would probably be easier if I was going to use this saturate the market strategy. It would probably be easier to just, you know, have a take about everything. Because the truth is that here on the live stream, we do that, you know, so I just have to be turning that into content, essentially. But you're right that ICT did absolute spam. And I do feel like even with me doing everything that I can to like increase the amount of content that I'm making, it's like not nearly enough, right? Like I really would have to be like full-time make content. Pay them to spam your stuff everywhere. Well, you know, so that's another thing, is that it is just me. I've never been able to come up with a good way to really help you guys get involved in solving this problem. Like we did do the affiliate thing, link thing, but that's not, you know. Pay an Indian $5 to do it. I will pay. I have a thing set up for every indicator that you every time that you sell my indicator package, I give you $100. I guess if I started and I said I'm going to give you $100 to start, and then I give you $100 for every sell that you actually make. Yeah, let me pull the affiliate link thing up. It's been so long I don't even remember the name of it. There you go. Oh, that's not a real link. There you go. So if you go to that track desk and you make an account, and you get somebody to buy the indicators through your link, you will get $100. You literally $100. So like what you should do is you should buy my indicator. So $200, and then get 3 of your friends to buy it, and then it's basically you made money from it. You made money from buying the indicator. Let's see here. One thing you do well as call out what you see in the DOM. You should do a video every day about what you see. I should. It's work. It's work. I guess the thing that I think is really kind of interesting about this situation is that in terms of what can we do to help the channel more, there's so many things that we could do. They will all require a lot more time and effort. Unsure if any of them move the needle or not. So how do you know where the time would be best spent? But then all of the free time that I do have, I'm pretty much spending it making content. So like basically what I did is I said, well, the best thing that I can do is I can make more full videos. So I spend all of that time writing really good videos and stuff like that. And that probably is the right call. It probably few things are going to get as much reach as just one of my full good quality videos. That is what we've built the YouTube channel from to begin with, right? And all of those other things are kind of like things that are like, well, but you do this with the little bit of extra time that you do have. Well, but that's hard because kids. So, like, would it make sense to pull grandma over here every day in order to make that stuff? I don't know. Have you tried talking to AI? Well, yeah, but... Kind of have to ask the AI the right questions to really get value out of it, right? Anyways, I posted you guys the link there for the affiliate program. So you go there, you sign up, and you know, it will give you a link and everything. And then for every sell that you make, you get $100. And that has kind of been my attempt to try and help you guys contribute. Because I know that y'all want, like, to make our own platform, for instance. Like, if we were making enough income to be able to make our own platform, I know that you guys find that attractive. So, that's one thing that you can do to help. I could try saturating the world. Another thing I wonder is... well, sometimes I'll make a video and I only put it on TikTok, and sometimes I'll make a video and I'll put it on TikTok and YouTube. And I don't know. It's because I've never really had a video that like really moved the needle, but it does seem like that the videos on YouTube do better for some reason. So I don't know. You know, coming back to the market now, because it's almost time for the equity market open. I was expecting more fireworks today than we've seen. Because there was all of this talk about like maybe they would have a tariff bill and things like that. I haven't seen it. Maybe they're waiting for the market to open first before they do it. So maybe it's not, maybe it's too early for me to give up on that. Let's see here, I don't need that. Okay, here's the open. I think now what's happening is I'm getting too ADHD. Like we've talked about so many different things all of a sudden that it's like, I think the thing that I was trying to get at is like if there's like if I'm gonna flood the world with content, there needs to be a overarching thing that I come back to that people associate it with, so that you know they develop that, you know, I like this brand and all that sort of stuff, right? Because I have too many. I have too ADHD. So now there's this other side is consulting. So I keep seeing videos from people that are like, why aren't more IT people working more on consulting and yada, yada, yada? Well, because I think that all I would, how would you do that? You'd go on to Fiverr and set something up, and now you're competing with everybody else that's doing that. And I don't know. I have a VPS where NinjaTrader is running 24/7 with 2 automated strategies. Did you try that? I've never tried one where I run it 24/7. A lot of my strategies, I always limit them to just the time that we're trading, because I think that the order flow stuff works best during those most active hours, you know? I did have somebody talking to me, like where he wanted us to promote his VPS service. And I was like, oh, that sounds interesting, but I don't know what kind of, I don't have content necessarily that I could use to promote that at this time. And Japanese yen is trending pretty good. Gold saw a bit of a drop, but it is on the way back up as well. And oil just continues trending down. Did any of you guys watch Donald Trump's speech last night? I was doing other things, and I thought that I would get a lot of, you know, synopsis of what he said and everything, but I'm not really getting that. And I'm kind of sitting here like, so why did they want to have a joint address with Congress so bad? Oh, it was like the third comment in chat. I guess I missed that, huh? Oh, I fell asleep to the Statement of the Union. But it wasn't the Statement to the Union, right? Well, I thought it was just a joint, addressing a joint session of Congress. Isn't the Statement of the Union like in... I don't know. They called it a joint address to Congress, not the Statement of the Union speech. Speech is generally held in January or February. So why aren't they calling it the Statement of the Union? Oh, when is Trump's address to Congress and why it's not called State of the Union? President Trump is set to speak early March in the first joint congressional address of his second term in the White House, though the event won't technically be called the State of the Union. Traditionally, presidents deliver an annual report to a joint session of Congress informing them about the state of play of the U.S., including goals, accomplishments, and plans for the year ahead. Usually, this occurs within the first months of the year and is broadcast to the entire nation. President's speech will not be a State of the Union, at least not officially, simply because he was elected only weeks ago. This isn't entirely uncommon, however, as the designation of State of the Union is more a technicality than anything. I see. Dems did not clap, right? Yeah, that's all I saw was people saying that the Dems wouldn't clap for anything. But I was expecting him to say significant, like, market-moving things in there, and it doesn't sound like he did. Bond vigilantes blow up the German bond market after whatever it takes fiscal package. I was hearing earlier Goldman saying that the German rates could rise. Is that maybe why we're seeing how much of the trend here in the treasuries is people buying U.S. treasuries and selling European bonds? I saw that. Yeah, we could do, I think that you probably weren't there around, but I pulled that up during the stream yesterday and I was shocked that they were doing that so blatantly. Because the liberals absolutely love to post that video where like all of the news stations were required to read this thing out. I was like, well, yeah, that was where there's this one large company conglomerate that owns all of these local news stations, wanted them all to share a particular message. Okay, this is, the Democrats are all putting this off as it's their content on social media, and it's all the same thing. It seems like such a huge mistake to me. Like Democrats are super triggered by that kind of shit. Man, there's some good buying there. Even though I'm not really getting a super clear imbalance. Well, 55 is not terrible. Like I said, maybe the robot is just, going for 60 is just not common enough. And we just happened to start it in the 1 week where it was happening. buy ICE and ES? What do you mean by that? And gold's really coming back with vengeance here, and the Japanese yen is really extending too. Bitcoin's falling. Thanks, Susie. PMI's at the top of the hour. ISM services PMI. That's going to be a big deal. You know, I do kind of think that a more viable path towards making the channel more popular is making a lot of content about what happened in the market today. Because that's going to reach a more general audience anyways. It might not necessarily result in more sales. It might not, but it probably would get more views on the channel. What do you think about developing strategies for futures with options? For example, using expiry prices in round numbers, you can definitely find something combining options and futures. Yeah, so I think number one, if you're doing market making, you're probably using options and so forth and hedging. Okay, so like that's the first thing, is that you would need a pretty big wad to be doing it, right? I don't think that you really get very good, reliable historical data. So it would really have to be something more like that. For some reason, my pricing model is better. Because I don't think that you would be able to backtest and verify the strategy very well. And there's definitely a lot of data and metrics that you can get around futures and options, but you have to pay for that. So another thing that's kind of great in me is there was a bank that I applied for, and they went for somebody else. I think that they had it down to 2 people and they went for somebody else. And now they're reposting the role again. So does that mean that they're adding another one, or that the other guy didn't work out? I don't know. But I have since decided that I don't want to work for a bank. I struggle hard to find an internship. The job market sucks right now in Germany. Well, I don't know if it's because of AI or not. Like, there's no way for us to be able to tell to what extent it's this or that, right? I've seen a lot of surveys suggesting that, like, companies don't want to hire juniors. Companies don't want to hire kids coming out of school. And there's certainly a lot of leaders out there that think that AI will do everything. But I'm not seeing a whole lot of evidence that it's actually changing anything. So, like, if it is because of AI, it's not because AI is doing the job. It's because they're just holding off on hiring. Like I kind of think if that's the situation, that in the future there will be like a huge rush of hiring once they realize that it's not working, right? Okay, so a little bit of light liquidity for the S&P PMIs, but it will be a much bigger deal when we get to the ones at the top of the hour. Wow. The move in the bund was 24 basis points. Well, that's curious. They sold off initially on the news and are now pushing back higher. And Steffa says, I'm thinking about making a Dom for Ninja Trader like Jigsaw, but cheaper. Well, there is somebody that has like a free one. I don't know. I did kind of wonder about the Jigsaw like business setup, like having a month, you pay monthly and everything. I am kind of like because like Ninja Trader, it's $1,000. So I kind of wonder like how the business plays out like that. You really need to have like the recurring revenue for it to really work. Because it seems to me that retail traders really dislike monthly costs. Yeah, I went long ZW. That's funny. Sure is volatile here. The liquidity is not coming back either. Maybe it'll just be like this until the top of the hour. ADP reports biggest disappointment in job gains in 2 years in February. I think we're just sitting here for the next 10 minutes, guys. I kind of suspect that the move is you buy it ahead of the PMIs. What's the expectation here? ISM services PMI, they're expecting 52.5. And I'm concerned that you would get another below 50 reading. And there's still potential. You know, the thing that's, I think, kind of makes today difficult is that there was such a precipitous decline yesterday, and now we're just retracing that. And I'm not really sure what justified the selling over there, you know? I mean, if it's higher than anticipated, won't they just sell it down to the lows? So I kind of feel like that for funsies' sake, we should just be buying it. But if I bought it here and it popped, would that really be that impressive of a trade? If you buy it, put your exit in 19.5. Wait, why 19.5? I thought I knew why you would be saying that, but now I'm looking at it and I'm not sure why you think 19.5. What about... Oh, that doesn't make sense either. Okay. Just remember the exit. Yeah. I got you. I get you. Is it because of that swing low that we kind of had at the start of the... Sometimes I want to get a little bit too loud. I hear a little bit of buzzing in here. I don't know if you guys hear that. I'm kind of like, is that my headphones going out, or is that some... I need new headphones. I can see here there was this low right here. So maybe he's looking at that. So here we got 90 seconds. Oof. It's higher than expected 53. Okay, stopped out of that. Interesting. Employment 53 spot 9 versus 51 spot 6. Prices played 62 versus 60. So in those numbers, you're not seeing any signs of slowdown at all. So I wonder what's with the divergence there between that and the report that we had the other day. 0.3 is the buyer or seller's cost basis, so a spot that they're likely to bounce at. Well, the question on that one was, should I have put the stop somewhere else? I think probably I should have, but I wanted to put it far enough away that, like, if there was like back and forth, you know, it wouldn't have gotten touched. So it's okay. Wait, how bad was it? Okay, 875. Oh, it was based on range projection. I get you. No, that's a good. Oh, are you using the range projection indicator that I added into the latest version? So I had added in here volatility projected. No. Projected range. I think it's that. Yeah. That one's got 27.5 though. I closed my short before the news because I'm a pansy. Why were you short? That's interesting. I tell you what, man. I think that I'm just a little bit like defensive because people were giving me shit when I posted the video about it. But like, come on, man. Every effing time. You can't explain that. Yeah, it's $200. Fucking works. It doesn't seem to be useful as an entry signal, but as an exit signal, like helping you understand what the market is doing, fucking works. Let's keep this up so everybody can see our loss, our sim loss. That should interest people, right? Good morning, AMG. That's a new name. No, normally I'm like super happy to see new names, but we've been having people troll us, so now every time I see a new name, I'm suspicious. Oh, how did you make that loss? So we were just yellowing on the news. I was saying, oh, I think that it'll be worse than expected. The numbers will be lighter than expected. And Uzi was saying, well, here's a spot that I think would be interesting as a target above us. So I said, why not? Let's try it. So it was really kind of just messing around. It wasn't a super serious trade, but it was wrong. So stop that. Man. Tell you what. It wasn't just that. It was that too. Well, the low from before the ADP news is 29.5. Should I care more about the ISM services than the ADP? I'm not sure. The problem is that the ADP has not necessarily been a reliable indicator of where the S&P is, or where the non-farms is going. So I do think that this of my headphones is going, because every once in a while I hear buzzing. So I think that the ear cup is like damaged, or the speaker is damaged. I know what it was when we were talking earlier about what can we do, yada 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 yada. Ads. Can make ads. I wonder if I can make shorts and then pay for those shorts to get boosted. I guess. I'm trying. Oh, I can't save without pass that, of course. The problem there is, can I make good ads? I guess if it was like a TikTok video, that'd be one thing. But I was also thinking about like Google AdSense ads. What do you think of AMD time cycles? Sounds like nonsense to me. I've never heard of that before, but it sounds like something that's probably based on price and some set amount of time that's probably not going to be very effective at predicting anything. So here's what I would say, how I would approach this stuff. Any trade that you make is really making a prediction about what the future orders in that asset will be. You're saying that the way that the future orders will interact in a way in which it will move price up after I get in, right? The most powerful influence in that is the market orders. So when you have a really big imbalance in favor of market buys, then that's going to move price up. Okay? So unless you have something that really effectively predicts what those orders are going to be over the time frame that you're looking at, you don't have a trade. There's lots of other things that you can look at that help. So like we were showing over here, we have a model that essentially sniffs out where the market maker positions are based on where orders were actually filled. So we know that the market maker's average cost basis for buyers and sellers are these two lines, essentially. Now, I do this by just kind of gaming out some simple rules. So, of course, the real market is a lot more complicated than that. But gives us a pretty good estimate that for some reason the market does respond to, and you can see it. It's like there and like there. Okay, so we got something really good here, right? We've got something that really does like show us, I think, market maker positioning and the market reacting to those levels. But these are not very predictive on their own, are they? Right? Like, okay, cool. I know that there's a very, very, very high chance that it will bounce there. But what did it do? It bounced there and then it kept going because people are still selling. So you need to know the real basis for a trade still has to be, I need to know what the future market orders are going to be. And the problem is that stuff often has very, very little to do with what the asset was doing before, you know? Do you have a version of this that allows it to be reset periodically? So you can do this. You know, I kind of didn't show this in the video that I made about it, but let's do this. What you can do, if we add a ZN 5 minute, 2 days, quick replay. Okay. Inventory cost basis. Have the save and load cache data turned off by default. Good. Okay, and don't show cumulative. Okay. So then what it is showing me is essentially these lines for just within that one bar. Now, I very much prefer to have it like reset at the beginning of the session, right? If there was some other consistent time that you wanted it to reset on, what I would do is I would just create a different session template, you know, come into the data series and use, you know, Instead of using the regular interest rate extended trading hours, use the interest rate regular trading hours. And then turn cumulative back on and reset at start of session. There we go. And now I have it starting at the beginning of our regular session. Gives me slightly different values. But I found that it reacts to the extended session values. So I could make a drawing tool. I could make a drawing tool where it'd be like, you know, a vertical line. And then if I decide to put it right here, then it would reset at the end of this bar. And then, you know, it would go from there. We could probably add that as a new feature. How do you get this? So if you go to speculatorseth.com, you can download the indicator for NinjaTrader. And right now it's $200 for a lifetime license, but you get a 2-week trial. So you can, you know, I don't know if you're using NinjaTrader, but if you're using NinjaTrader, you can download it, install it into NinjaTrader, and try it for 2 weeks. Risk-free. Is quarterly theory another ICT thing, Uzi? I'm surprised I hadn't heard that one. So earlier in the chat, let's just add it down here again. Oh, come on. So we have an affiliate program with the indicators. So what you can do is you can buy the indicators yourself for $200, right? And then go to Track Desk, set yourself up as an affiliate, start sending the affiliate link around, get your buddies to buy it, and then you make $100 for each affiliate. So if you buy it yourself and then you come in and you get 3 affiliates, you have to do 3 minimum to get a payout, but then you would basically get the indicator for free. What do you think about SMT, the divergence of correlated assets like ES and NQ? So I spend a great deal of my time looking at correlated assets. So that's why, for instance, here on my DOM, I have all 3 of the treasuries, because I want to see if there are differences in the way that they're moving, for instance, right? And when I'm seeing that like 2 highly correlated assets are converging or diverging, and the way that I do that is through spreads. So I have a spread here, for instance, between NASDAQ and the S&P 500 that kind of tells me when ES is outperforming relative to the NASDAQ. So you can see this is going up as the S&P 500 is going down. That means that the NASDAQ is getting hammered more when we're declining here. That does tell you a little bit about like why we might be moving, and it also gives you a lot of information that you can use to better interpret the order flow that you're seeing, especially in the treasuries, because a lot of the order flow is order flow from the spreads. So if I know which way the spread is going, then I can kind of pull that particular flow out and analyze, you know, get a better idea of what the market is really doing without that flow. Some real selling. I was just about to say that, man, like the treasuries like really went dead after that. But now like a really strong sell impulse has come through. Well, so let's learn more about SMT here. Smart money technique. It is a trading strategy that involves analyzing price discrepancies. Show more. Look for opposing signals such as one asset forming a higher low while the other forms a lower low. Yeah, it is an ICT thing. So what would be an indicator for that other than spread and correlation? Kind of curious. So, you know, something I just didn't notice until now, but is worth pointing out. So another indicator that I don't talk about as often, this is gap. So basically, sometimes there are prices where they went through that price without anything trading there, essentially. And since the PMIs, it is happening everywhere. So like market makers are not holding liquidity in the S&P 500. And it is kind of starting to turn into like an unhinged market, I think. That's wild. I've never seen a cluster of those like that. Normally, we look at it and that's a spot where they have a tendency to get pulled back into that spot over time. But if it's happening everywhere, then I don't know what you do. I don't know what you do about that. Okay, well, I'll show you what I do have. Is I have correlation, or sorry, I have spreads. So like I can come in here and I can look at ZN on a 30-minute basis for the past 15 days, let's say. Okay, so here's ES. And ES and ZB are highly correlated. Should I add ZB on there for us too, just so that you can kind of see it? ZB. We also want this to be 30 minutes for 15 days. Okay, cool. All right, so you can see like the charts are almost identical, right? But if I come in to the indicators and I add my speculator set indicators and I add spread, in this case we want to do 2 to -1. So if you go to the CME website, there's a thing that says here's the ratios that you use for different spreads, but we're going to do the knob spread, so ZN ZB. Okay. All right, so here we get the spread. So you can see that over the last 15 days or so, that this particular spread has been going up, which means that it's steepening. The yield curve is steepening. And we can further, another cool thing that this will do is I can change it to candles, so I can get open, high, low, close. Canada says they will not end tariffs unless all U.S. tariffs are dropped. Well, if Canada ended all of its tariffs, including the tariffs on the dairy industry and stuff like that, that might be possible. Wait, what are you asking about, Uzi? What caused the hole? Are you talking about when I was looking at the gaps? Oh. Oh, okay. My hot water heater has a new hole in the top of it. Came fast and out of nowhere. I think that it is letting air in, ruining my air. Oh, yeah, that's bad. Yeah, water heaters and plumbing. Yeah, ask Izzy about it. He knows a lot about that stuff compared to me. Related to your comment about the market makers, something that I've noticed is that on the ES, the liquidity used to be in the hundreds, and now it's on the 20s and the teens sometimes, and hardly ever above 50. Yeah. Well, part of that is because as the S&P 500 has gotten larger, a percent move is more ticks, relatively speaking. And so the liquidity thins out because it's becoming a thinner instrument. At some points, I would think that they should do like a 10-to-1 split, you know? But they don't want to do that because, they like to have the big number, right? Maybe at some point they might change the size of the futures instrument too. So that's part of it. But it seems to me that the beginning of this year, with all of the policy uncertainty and everything else that's been going on, that market makers are a little skittish. Okay, something else if you're trading the ICT stuff, which I honestly I despise, but we also have a fair value gap now. Where is it? Do I not have it named on here? Maybe I still have it in alpha. Yeah, I still have it in alpha. I think we should be able to move it into the full thing. Ooh, do we even actually have any fair value gaps in Xeon? We might not. And it does look like that we don't. Not on a 30-minute chart at least. Maybe on a 1-minute chart. That should be listing itself as a fair value gap. Wait, why is it not? Maybe there is a reason why it's still in alpha. Gonna simplify this down. Oh, maybe it's because of that. Like, those should definitely be drawing them, and it's not. What about if I change it to ES? Because that's where I always tested all this stuff. Okay. Wait, maybe... Oh. It's probably not doing it because I don't have enough data on the chart. Yeah, there you go. Some of his concepts work, just not for the reason he claims. I'm not sure about that, to be honest with you. Everything from that guy that I've backtest turned out to be complete nonsense. So the thing that, for the fair value gap, the reason I created this indicator was so that people can see that the whole thing with a fair value gap is that they happen everywhere and people just aren't seeing all of them. They only see that it's a confirmation bias. They see the one where it matters, and they're not seeing all of the ones that don't matter. So they're going to see like, oh, look, here, this fair value gap mattered and it bounced off of it. That's the way that they say. They'd say, this is a liquidity grab. Then there was a move and it pulled back and it came where did it come back to? The fair value gap. And then you take the reversal. And then he would buy it here, right? And the problem with that is, well, yeah, but there was fair value gaps like all over the fucking place. What about this one? Does this fair value gap not matter? Oh, okay. I also think like the liquidity sweep thing is actually the thing that I think is the most nonsense. So this idea that like we're going to come through and sweep through liquidity so that it can then reverse on it, that makes no sense when you really understand how the limit order book works. Because how does this work? Well, so look what we got up here. Let's minimize this for a little bit, okay? So this blue column, these are limit buy orders. So orange-red column is limit sell orders. And those are going to be matched up against the market buy orders coming in and the market sell orders coming in. That's how it works, right? So if there was a liquidity sweep, what does that mean? That would mean that you would have to, like if we were going to push down through the lows, oh, there's supposed to be liquidity down here. How are you sweeping that liquidity? You are selling and selling out all of that liquidity there. In other words, you're selling in order for what? In order for the price to reverse on you? That doesn't make sense. Now, what market makers can do is they can kind of like pull their liquidity and make it easier for something to move through. And they will kind of play that on you where like everybody gets positioned one way and then they'll kind of make it easier for it to move the other way and hope that they all get stopped out, right? But that is pulling liquidity, so that wouldn't be a liquidity sweep. And you're definitely not going to see that at like a new low, for instance. At a new low, there's always going to be a lot of liquidity there. Wow, that was a really strong push down right there just now. Okay. So the whole concept of a liquidity sweep is a nonsense based on a complete misunderstanding of how the fundamental rules of the market. Now, something that does happen is people will push through a set of liquidity because they want to sell it. And when they're done selling it, there will tend to be a short-term mean reversion. So like if I buy a bunch of something, the impact will follow a square root law. There's kind of a point at which it's not having much impact anymore. And then when I stop trading, you kind of fall into this liquidity hole that's behind it. And you kind of have this pullback. That's where you get this sort of thing where it, like this kind of pattern, right? Right. Or another pattern that you could see is like down, then there's the pullback, but then somebody decides to come and trade it the other way. And then you get this. But this happens because you've got meta order down, meta order up. It happens because market sell orders are coming in here and market buy orders are coming in here, right? So, but this is a case where like the thing that he says happens, like just doesn't happen. Like it just doesn't happen. And so it's not just that like his theory about the market or whatever is complete nonsense. But it's also that he's saying like there's some sort of predictive pattern with a good outlay here for you to take, and there's not. You go and backtest them, and they're not profitable setups. And so this comes to the larger conundrum, which is that markets are very statistically efficient on intraday basis. So if I come in and I buy a bunch of something, that's going to move the market up. So if I have a signal that really predicts that it's going to move up, right? Me coming in and trading it is going to cause the market to move up. So if there's a bunch of retail traders that all know about that sort of thing, all of them buying, they're definitely going to take the edge out of it. And that's how the market becomes so statistically efficient. So everybody's trading any kind of little inefficiency that they can find and taking them out of the market. And what you're left with is noise. And so that means that any setup that you look at in terms of intraday data, you're looking at the chart, and it doesn't matter whether you're using a moving average or whether you're looking at that this is a doji or where I am relative to this past price or none of it, you're not going to find an edge in that stuff. It might appear like there's an edge in it to you because confirmation bias and all of these sorts of things, but the market is too statistically efficient for that. So you have to go a couple of levels now. Okay, so next level is we can get into the order flow. So order flow has a lot more data in there, and there is a lot more statistical aberrations that we can prove in order flow data. Like, for instance, one of them is if you go in at any random time and you pick an order, a random order, and you say, who was the aggressor in that order? Was it a market buy or was it a market sell? Okay, it was a market buy. And then we come back an hour later and we pick another random order. It is 0.5% higher chance of that second order also being a buy. So there's a strong auto correlation in whether the orders are buy or net sell. Okay, so that's one thing that we can see in the order flow that we know of. Another one is that when the amount of liquidity that is on offer or on bid is very, very low, then we have a very high probability of ticking in that direction. And that's where you get algorithms that do what we call catching the edge. So they're buying it, like these guys that just bought at 04 half. There was like 600 contracts or so that traded there. They're all trading it on, I can buy it and I'll immediately be up one tick. And then if I'm not, I just bail, right? So with order flow, there are some straight up profitable setups, but and they exist because of the structure of the market. Like the catching the edge, that happens because of the rules of the game, right? Well, somebody's always going to make money from that, but it might not necessarily be you. Why? You have to be fast, right? So when we get into order flow signals, the really reliable ones at least, tend to be like extremely short time frame, like within seconds, right? So we can't necessarily use that information to get a profitable strategy that can get us to break even. You definitely don't want to trade against that stuff, right? But that still just gets you to break even. So then where does edge come from? Well, any trade that you're making, really what you're doing is you're making a prediction of what the future order flow is going to be. You're saying, if I'm buying it, then you're saying, I think that market orders are going to come in behind me and buy it up and move price up, right? And so we have to have something that predicts the future orders. And once you look at it from that perspective, it kind of makes sense. Like, yeah, there's lots of people out there that are going to buy or sell, and it has absolutely nothing to do with what the price chart was doing. Nothing to do with it. Like if a piece of news comes out, they don't care what it was at. They just are trading based on what that piece of news says, right? Or if they're an index fund, they have to rebalance their portfolio. They're buying or selling based on how to rebalance their portfolio. And so that's why the past price movements don't really predict the future price movements very well. It's kind of like at that point, technical analysis is kind of like you're at the beach and you're noticing all of the teeny tiny little ripples in the beach and how that goes, and you're missing the tsunami coming at you, right? You're missing the tsunami coming at you. So what are some of the things that we know that are effective at predicting future orders? Well, I just listed a couple of them, right? One is like end of month rebalancing. So there are certain that like the first and last days of the month are things that, you know, like we can tend to get trades from. Economic news, like economic releases that we got today, that's stuff that can very effectively predict orders. You can either try and predict that number, which is hard, or you can wait for the number to be released and then say, okay, well, we moved this far, but I think that there's going to be even more orders selling than that. So then I take a trade, right? That's something that really highly predicts future orders. Breaking news. Donald Trump just tweeted something, you know, and you just kind of have to get in a situation where you get the piece of information and there's an informational asymmetry. You know something and the rest of the market hasn't caught on yet, but you know that they're going to catch on soon. And so I can take the trade and I know that there's going to be all these market buyer, market sell orders behind us, right? And that's where as day traders, that retail day traders, that you may possibly be able to find edge, despite the market being very statistically efficient. Because in the end, the market is very statistically efficient, but it's not very informationally efficient. Current price does not reflect all available information, not even close. So sometimes there are situations where you can have a piece of information and know that there are orders coming behind it. Isn't a retail trading platform powerful enough to execute those kinds of edges on a DOM to be consistently profiled? You know, so like when we're talking about like catching the edge, yeah, you would have to be an algorithm to do it. You'd have to be an algorithm. You'd probably have to be an algorithm co-located in a data center and everything else to take advantage of those. There might be some order flow edges on, you know, that midterm time frame. So there's basically like we know there are HFT strategies that kind of happen on like on time frames of seconds, and there are like momentum strategies that we know happen on time frames of days. But then there's this place in between that I kind of call the desert of randomness, where like maybe there's some edge, but nobody's ever shown that. Yeah, the benefit, I guess, of low liquidity is the fact that your resting order gets filled out very quickly, but obviously the downside is that when price goes against you, it goes very fast. Yeah, so I would say, by the way, if I'm here in the treasuries, I'm going to try and explain something that I don't talk about very often, okay? If I'm watching ZN, and I think maybe we're in a liquidity hole, okay? So I think that we're going to go back and forth between these two prices. What I'm going to do is I'm going to look at this and I'm going to say, so if I took a fill here at O2 and I want to get out at +1 tick at O2 half, how many orders have to trade for me to get filled? Well, right now there's 2,000 and it's dancing back and forth across this. So I think that I would need to get at least 2,000 contracts coming through for me to get full on the other side. So then I kind of come out and I look and I'm like, well, what is the actual pace of the orders that we're getting? Like, how long does it take for there to be 2,000 orders, right? And I can use that to determine whether it's really a good trade to put my order there at O2, right? Well, now I got 1,000. So now I'm 1,000 in the spot. That's cool. All right. That's the way that I do it in ZN. So if I'm in a less liquid instrument, I can do the same kind of analysis, but maybe it's a little bit backwards, right? Because if I put it at, where are we at? 57? Yeah, 57.95 in ES. I hide the first digit, so I couldn't tell what we were. I forgot where we were at. Okay, 57.95. And there's only 90 contracts in there. Well, we're trading way more than 90 contracts a minute, right? So like that's almost certainly going to get filled. So kind of what I need to do is do the opposite and say, like, how many orders am I seeing in the time frame that I'm thinking about, and like what the range is, and have my limit order a few ticks away from the current bid best offer, right? So then it still ends up being the same principles that you're using in ZN. It's just that instead of it all being, like I say, if I get here at 111 even, I've got 3,000 contracts in front of me. I have to go and do it like this and add them all together and say, okay, I've got 1,000 contracts in front of me. In order for me to get a fill, there would have to be 1,000 contracts sell first for me to get it. Right? And then you can start to do some things like, okay, but if 1,000 contracts sold, at that point, do I really want to buy it? Because that might mean that there's a really strong sell impulse coming in against me. That order flow might be toxic. But I think from there, how to, especially you guys, know how to kind of sort those things out. Oh, okay. So I don't dispute those edges in the DOM order flow, but I can't profit off of it. So you don't want to trade against them, though, right? That's the thing. So that's why they're still very, very useful to you. They're going to keep you out of bad trades. They're going to help you get better prices. They are not like a good edge on their own, but they will enhance the real edge that you have. Substantially enhance the real edge that you have. The real edge being informational inefficiencies, right? So the best thing, this is going back to the thing that kind of started this discussion, right? Which is we have an indicator here that is basically telling us where the market maker's position are. So this blue line is the average buy side market maker's position, and this orange one is the average sell side market maker's position. And we find that price is extremely reactive to these prices. So if I was short from maybe over here, I got in before the news and we had taken the opposite trade that we did because it was mostly just a guess. Okay. I have to think about taking it off at 03.5. Honestly, you kind of have to think about taking it off at this one, but especially at this one, because the chances of them reversing, at least temporarily there, is really high. But does that make a good entry position? Does that make okay, if it gets there, I should buy on it coming back? I suppose that you would get it a lot of the time, but then, this happens, right? So is it actually a good trade? It doesn't result in good entry conditions, right? But if I have something else that's a real edge to get me into a trade, like an informational asymmetry, then all of a sudden this becomes very valuable to me, doesn't it? It tells me where I can take profits and how to manage the risks. let's see here. Is the settings used for the indicator open for discussion, meaning what calculation is being used to get a better understanding on the inventory cost basis? Wait, I don't understand the question. The where it decides the open is the session start. Everything goes to 0. Is how it decides that. So if your session template has multiple sessions, then it will reset multiple times a session. Okay. But it seems to me that the way that the market makers manage this is on a day-by-day basis. So they are basing it off of the whole extended session. So I would just keep it as cumulative and on an extended session chart. Okay. That's the first thing. As for the calculations, basically what it's doing is it's looking at a footprint. It's looking at a footprint and it's saying, you know, here's what all the cells were. Here's what all the pies were repeating here. And then it's saying like every time that there were cell orders filling, that's me adding on inventory. It kind of starts from the bottom and it says I added this much inventory. I took this much inventory off. So that leaves this much here. Added this much inventory here. I took this much inventory off. So that's how much I have here. And it goes up that. And then what's left, it takes the average of, and that's how it gets the average price. Or like a more general way to think of it is, it's a model. We assume that this theoretical market maker takes all fills and always takes a profit if they get one tick above where they got filled. And that's how we get those levels. You can do it by hand. I found programming it to be pretty complicated, but you can go and calculate it by hand. Wouldn't recommend it. It's a lot of calculations. Right. And it's a footprint of like footprint for the whole session. Right. You would have to have a footprint for the whole session, or like a volume profile that tells you buys versus sells. Because Jigsaw has a volume profile that's like the buy volume profile, the sell volume profile, right? Tell you what, man, the thing that's so crazy about it too is there's no way that you would have identified those spots. It reacts to it so hard. Like there are really just see it on so this line right here, the way that it figures this line out is it says, well, how much profit would I actually have banked in? And then like at what price would they like be outright losing money because it's gone so far against them that even the amount of money that they've made along the way doesn't help, right? That's where that line comes from. And it hard bounces off of it every freaking time. And where are you going to get that price? Because that has there's nothing on the chart that's going to tell you. There's nothing in the past price history that's going to tell you that it's going to be at that price, right? If you were coming in here at 4 o'clock in the morning and you said, I'm going to buy it, there's absolutely no way that you would guess that there would be a hard bounce at that price based on the past price history. Nothing will tell you that. And yet this tells you every day, every day. So the issue is you don't know the threshold where they need to rebalance? Well, yeah, so they tend to rebalance at their average price, is what I'm saying. They tend to do it at their average price. But again, that's where it's like, what really decides where it's going? The market orders. That's why you're able to see this thing where, like, yeah, they do the short-term bounce right there, but then they do go lower. I'll only try it again. They do go lower, because, right? The market orders are what determines what it's really going to do. The market maker is a small player, relatively speaking, right? And that's kind of the whole point, is that the smart money concepts thing of thought of things is that, like, the market maker controls everything. And this shows, okay, even when we really do know, like, where the market maker is positioned and everything, because we can kind of see that and game it out, we find that it's not very predictive of the future. It's only predictive of, like, really short-term bounces. But the thing that really determines where it's going to go is the market orders, this cumulative delta selling. Can you expand? Well, they don't, but that's what smart money concepts believe. They believe that there's an algorithm that controls the markets, and that the market maker is making this thing happen to fool you all into selling so that he can then turn it around and buy it, and, you know. No. You just said that you don't know where their profit is, so they can let price run away from. No. So what you're doing is you're looking at their current inventory. So I have a good estimate of where their current inventory is, essentially. So that does give you explicit. I mean, where else am I getting these levels from? What do you think the line represents then? Cost basis long, is that where the long entry and stop out longs, is that where the longs would lose money? Yeah. I forget which ones I call them what, but isn't the orange line, hold on, let's look. I thought that I called the orange dotted lane cost stop out long, but oh, it's not. It's called stop out shorts or stop out longs. Okay, so it's basically like saying, here's the cost basis, right? So remember I said that you know, I'm looking at all these numbers. And I look at these and I say, there's this much inventory here, there's this much inventory here, and there's this much inventory here. Well, there's also, I took profit on this many here. And I took profit on this many here, and I took that profit on this many here. So I add that together, and I know their cumulative profit for the session, right? So then what I can do is I can say, okay, here's their average cost basis. Here's how, or sorry, the sellers, right? Their cost basis is here. It's moved. Oh, well, let's do it. Let's let's game it out for the actual situation that we have right now, right? So we have the buyer's cost basis is here, right? And we know how much money they made overall. And we also know how much money they're losing on their current inventory, right? Because price is below their current inventory, right? And this line way out here, I guess in this instance, it's probably really far away, right? Okay. But this line down here is basically like how far it would have to go for the buyer to start losing money on the day, given their current inventory. That's what that line represents, theoretically. They bounce off of it really hard. you have a stat on how likely it is accurate? So I have done some back testing and on this, but it's kind of limited how far back I can go. So I don't, even though my back test was really good, it's not like 5 years of data, so I don't want to make a claim like that. Maybe 5 years from now we'll be able to do it because it's collecting all the data. Broke all of those prior tops fail. Okay. But that doesn't... Okay, it did that one time. That's true. That's true. Maybe that's true that it did that one time. Let's see here. What are you showing? Okay, what's the question? So market maker in this case is liquidity providers. So the reality is that there are a few high frequency trading firms like 3 to 5 providing liquidity, and then a bunch of random retail traders, right? What we're doing in the model is we're using heuristics, right? And we're just combining them all into one entity. And we're just saying if we assumed that everybody that was providing liquidity was all combined together into one massive entity that was providing liquidity, right? What would their average position be, right? So now that you have that line, now you can think, okay, well, there might be some people that their position might be better than others, right? But on average, it's this. And because on average it's this, that seems to be why the market reacts to it. No, yeah. I'm not doubting the validity of the line, just saying there's a setup there. Well, yeah, but that comes back to if you're just using a price history and you do a setup, you go and back test it, you're not going to find a profitable trade from it. And I've already tried that. So I think that we have shown that it does improve your exits, but every kind of setup that we've done based on that, it doesn't give you a good setup. And we've tested the smart money concept setups too. So, but that again is just remember, what matters is the future orders. What makes you think that this Carmarilla point or whatever is going to be an effective predictor of future market orders? So, because once you really start to think about who are the people out there that are potentially going to buy in the future and all of these things, the idea that they're all doing it because they're looking at a Carmella point is kind of silly. Past prices aren't very predictive of future orders. Oh, no one, but it was okay. So you're saying on this one right here, which one were we looking? We were looking at this one. How would you know that it's that point, right? Because of course this line changes, updates bit by bit, but Like, look, right from here when you might have taken the trade. By the way, do you see why do you know why I'm pointing this point out? Right? I'm always interested in the place where the market was like dead and there was nobody really interested in it, right? So this is, okay, the market is dead. I bought it here because I knew that this meta order was coming, right? I have a pretty good idea of where it's going to get to and stop before all of that, right? So you might have looked at this line, right? Well, it went past this line, but how do you know it's not going to go? How do you know that it wasn't going to go all the way to here? Or that it was going to go to here? Yeah, I bet you there might have been some people that thought, this is the end. But I was merely saying there's nothing significant at that particular price. Again, if we look right there, this isn't really, there's not like some pivot or anything back here that corresponds to it. You didn't answer my question. Oh, you're right. I didn't see it. Suppose I make a 0 date to expiration trade on ES at the money for approximately 20K, either overnight or the last hour of the trading day, based on statistical properties. Would that affect them? Yes. All orders have some impact on the market. It might be super, super teeny tiny, but it's there and it's actually measurable. Actually measurable. But part of the thing that you have to consider in terms of like, why is the market so statistically efficient, right? Is, okay, but if it works, yeah, you're just one lot, but it works. You're not going to just keep trading one lot, are you? You're going to size up. If it really works that good, you're going to size up. Or you tell your friends about it and they all start trading it. And I guarantee you one of those guys is going to size up, right? Oh, nothing you can see is significant, me neither, but perhaps another trader. That's possible, I suppose. But, okay. I don't know what your point is there. This doesn't seem like a good point to me. The thing is that, so there are some situations. The big one is if we're just kind of moving along and then there is a breaking news event, not necessarily an economic release like we saw in this particular case, but if like there's a breaking news event, they go to that line every time. I have yet to see a situation where they didn't go to that line and bounce. They will often short-term bounce and then continue lower, but they always go to that line. And like that first bar is like to that line to the tick in CN. It's crazy. It's like, because the real question here, I think, is how do you judge the efficacy of a line, right? Because could you say that like maybe it's not a profitable strategy? If I know that like, I'm going to trade on mean reversion towards this line, or they're going to bounce off this, like first of all, if you just have a line, there's so many different ways that you might be trying to trade off of that line. And then maybe you say there is something to it, but it's not enough to make you profitable or something like that, right? Well, here's this line and here's your line. How do we say whose line is better? Right? It's something that seems to me like we should be able to quantify, but I can't figure out how you would. But what I can see is a line that is very consistently affecting the price, like it always does. And not just like it kind of came around to that area, but like it's hard. In ZN, it's hard bounces. So that is one thing that I think we can point to that really, really supports the efficacy of the model. Obviously, it's not perfect, but yeah, lines are areas of interest. I mean, I will look at lines, and that's just to me is kind of like, oh, that's the next spot that people might be looking at. It doesn't predict anything, but it does kind of give me an idea of like how strong of a move it is today or something like that, right? That's how I look at it. That's how it, well, especially like straight lines, you know, like pivots or, floor pivots. It's a good example. Or previous day value area, high-low point of control, right? But again, like all of those things, I think the ones that I've spent the most time on, floor pivots, opening ranges, VWAP, previous day value area, high-low point of control, and all of the common strategies, setups, etc. that retail traders talk about in relation to those points, and I find no edge in them. Backtest it, they don't work. Market's very efficient. Anyways, I need to fix that. It's not a bug, but I need to fix this thing in this. That's like, okay, so if there's not enough chart data for the volatility filter to work, then it needs to say something, and there needs to be something that if I set it to 0, it just ignores it. So I guess a slight bit of work that I should do on the fair value gap thing. But again, like once you can see where all of them are, kind of, especially if you come to like a 1-minute chart. There you go. Now you start to go like, okay. It's kind of funny because on this one it did. Oh, it's interesting that there's not any fair value gaps from here. That's actually really interesting. Oh, yeah. So like another thing is we could say, oh, well, it came to this fair value gap, but I bet you, is there ones lower than that? Oh, no, not on this chart. Wait, maybe we should go back like 90 days. Come on. No? Okay, like here's where it starts, where you start to get like really good. Okay, cool. There was this fair value gap from a long time ago and they bounced on it, but like, why not this fair value gap in this one, and this one, and this one? When you put it on a 1-minute chart, you realize, oh, the reason people think they see things in fair value gaps is because fair value gaps are everywhere and you just can't see all of them. If you have something that points all of them out to you, you very quickly realize that it's probably not very useful. I do kind of wonder, though, there's situations where you get a big trend and it doesn't leave fair value gaps behind. What's with that? Right? This one didn't leave fair value gaps behind, but this one did. Maybe it's a bug. Wait, can I find one where we've moved down and it leaves fair value gaps behind? No, I don't think I am. Maybe it's a bug. Because surely there should be a fair value gap there like that, right? Ah, it's a bug. It's a bug in my code. Interesting. I'll have to think about why that gets caused. Oh, I bet you I know what it is. Well, now's not time to do it. I should probably go and wake the kids up. Guys, I will see you tomorrow. Stay excellent, team.